What's up guys, Philip at Trade Genius. In this video I want to kind of go over again the Bitcoin halving, when it's happened, how it's affected price, and when it's going to happen again. And you really want to take a look at this, kind of a big picture outlook on Bitcoin. So let's dive into this.
Trade Genius.
Guys, really quickly, our specials are ending today. So this is our back to school specials. We have the $3.99 package that gets you the room and the signals, crypto, ETF, binary options. If you're into the courses, you want to learn about how we trade these things, then you can get our courses specials 2 or 3. All right, so I just wanted to point that out. Ends today. These prices, these markdowns are not going to be at this level ever again. So check that out. No coupon code needed. You just want to go to tradelikeagenius.com. All right, so let's take a look at this halving chart. Okay, so what we have here, guys, is the first halving. This was block reward gets reduced down to 25 BTC. Some of you are familiar with the halving process, and for those of you that aren't, so when Bitcoin first started out, it had a block reward of 50 BTC. So when the miners went and confirmed the transactions on the network by solving those complex cryptographic puzzles, that used to give them 50 BTC. But there's a programmed rate of inflation in the Bitcoin code. So over time, the amount of Bitcoin reward gets halved. So the first one happened in November of 2012, November 29th. So that went from 50 BTC to 25 BTC. So what that meant was when you're mining, you got half as much of the reward. And so what ended up happening was subsequently price went up. And if we look here, we had a over 9,000% increase from the time that it halved to the very top peak before a major decline bear market ensued. Then we look and it happened again. So the next programmed halving happened. This was back in 2016. I remember with guys trading going, this is gonna produce another bull run. You know, we're taking the amount of supply that gets redeposited on the exchanges. You know, miners are going to mine for profit, so they're going to take the amount of Bitcoin they mine, put it back on the exchange. I'm sure there's some that will put some to the side for holding for longer term, but they've got to make money to mine. So they're going to put what they mine back out into the market. So you got to see that this supply starts to shrink, right? What's happening to demand? Demand is growing. So that's driving this price action after every time we have. Look at the second halving. So now we're down to 12.5 BTC. That's where we're currently at. So 2016, mid 2016, July 2016, runs up. That was a almost 3,000% increase, and we topped off just shy of 20K. Now, the third halving happens approximately at the rate we're going about mid 2020. And that reduces the block rewards down to 6.25 BTC. So this is every 10 minutes, right? When the blocks get solved on average 10 minutes, and the amount of Bitcoin that gets rewarded to the miners that solve the puzzle, and then, you know, they can take that and either, you know, hold it or put it to market. A lot of times it's going back to market to recoup costs and make money. So, but the point is that we're going to see this really a large reduction in the amount of Bitcoin that gets reintroduced back onto the markets, onto the exchanges. So again, this is going to be a driver of price. And this is a log chart, right? So you see these log trend lines that are kind of holding. This has been holding the trend on the bottom. This has been kind of like another point where it's been respected here and here, here and here. And you know, this trading range, when we get to this halving area, takes us up into the 30,000s. And so if we say we held this line and we're somewhere here at this halving process, and even if we were to just do less than 1,000%, I just drew a range up to the top of this trend line, you know, that takes us well into the 6 figures. So I've always thought that 6 figures was very doable for Bitcoin. Maybe you've heard $1 million out there. That's going to take a pretty large market cap, but if you look at the overall market, and if you look at this as like gold 2.0, and you look at the gold market cap of about $8 trillion, you know, that's where things get to 6 figures pretty quickly. So this is food for thought, guys. You know, when we're in these markets like we are now, and we've had a pullback like this, a lot of times it seems like the bottom's never going to be found. And what happens is the bottom usually is in when people are expecting another move down, and it never happens. And that's the bottom. It was a rounded bottom in 2014 and 2015. We're currently kind of tracking that, but in a faster fashion right now. If you look back here in the first half of 2013, we kind of had this consolidation and then another thrust higher. This is between the halving events, and so we may see that over here as well, where you have a situation where you go and make a move from here up and actually take out the prior highs, a la what happened here, and not so much what happened here in 2014, 2015 with a long protracted rounded bottom. So bear that in mind. We may get another thrust higher here when everybody's thinking this is kind of more like the same time frame as 2014, 2015. We'll go over that chart and that model on Monday morning's video. But anyway, I just wanted to kind of show you guys kind of big picture where this is headed and how the halving has really affected price in the past. So that's pretty much it for this video, guys. Appreciate you guys watching. Please hit the like and subscribe button. That really helps us immensely. And we'll look forward to seeing you guys on the next video. Take care, guys. Bye.
Trade Genius.